Hi guys, it's Marissa here from Rise High, and today I am joined by Peter D'Alfonso from Restore My Credit. Thanks for joining us, Peter.
My pleasure being here. Thank you, Marissa.
And thank you for tuning in. Today we are talking about how to protect your credit rating, and we will be going through comprehensive credit reporting. We thought this topic was really useful at the moment because we have been getting a lot of queries about how to protect your credit rating through this period. Obviously, some people are doing it tough right now, and there are some things that people are doing to their loans, like repayment holidays, that are causing anxiety or are causing concern or confusion about what impact that is going to have to your long-term ability to borrow money. So I've invited Peter here today, who is the expert on
hopefully
credit reporting and credit rating. And what we're going to do is we're going to answer all of your questions today. We've already received quite a few questions from you, so thank you for those. We will answer them today. Plus, we are live and we are taking questions live. So please feel free to put any questions or comments that you have throughout today's session in the comment section below, or if you'd like them to be anonymous, you can email them to emily@risehigh.com.au, and we will definitely try and get to those questions through the session today. In the comment section below, you'll also find some useful links and useful handouts that we are going to be referring to. So hopefully that will help too. Welcome, Peter.
Great, thank you so much. Great to be here.
It's obviously been a really interesting few months.
Definitely.
With everything going on with the coronavirus and semi-shutdowns, and it's really nice that things are starting to return to normal.
Thank God.
So hopefully that continues. But I guess the main thing is that now we're starting to, a few months on, we're starting to sort of see what the outcomes are for people, and I think we've definitely had some people that are a little bit concerned about the future. Obviously, at the moment, the government is providing some relief through increased job seeker and obviously the JobKeeper payments. I think they've gone a long way, but I think people realise that they're not forever.
Definitely not. No.
And we have had clients who have lost their jobs or had reduced income, and obviously that's when it becomes an issue. So before we get into comprehensive credit reporting, can we just start by explaining what a credit rating is?
Yeah, sure.
And I think we might also delve into why it's actually even important to
absolutely,
be aware of your credit rating.
Yeah, definitely good question. Look, here in Australia, there are actually 3 credit reporting bureaus. Equifax, formerly known as Vida, Ilion, formerly known as Dun & Bradstreet, and Experian. What credit reporting bureaus are companies that collect and store data about a person's credit worthiness in terms of whether they have had adverse credit or positive credit. The importance of this is that all lenders, when you're applying for any sort of credit, be it mobile phone, a credit card, will always do a credit check under the privacy.
Interest-free purchase.
Yes, interest-free purchases. Yeah. Anything that involves credit, there's generally a privacy consent that's required, and that privacy consent is for them to obtain that credit report. Now, everyone's credit report contains certain data, contain your personal information, so they know who the identity of the person is. It contains inquiries, how many inquiries you've actually made. And a lot of people don't understand that. They think it's only the inquiries that have been approved. It actually isn't. It's any inquiry that you've made. So I remember a long time ago, probably 10, 15 years ago, a lot of people used to do credit shopping, and they would just jump online and apply for as many credit cards as they could in the hope of getting one. That's actually really bad because it will just list a whole bunch of inquiries.
And that equally applies to people that get multiple pre-approvals.
Yes.
Because it just it increases the number of inquiries.
Absolutely.
And I think the most surprising, I think most people understand that, a loan application results in an inquiry, but I think it's all the hidden stuff.
Yeah.
Like the interest-free purchases.
Absolutely.
Or, people don't realise that buying a piece of furniture on an interest-free term would actually impact their credit rating. So it's all of those little things that people don't, or like you said, the phone bill, or like getting a new phone plan.
Yeah, absolutely.
It's all those little
So what everyone should do is, if they're signing a privacy consent, they should be aware that that's actually an inquiry.
Shout out to Emily, Saneth, Delia, Julian, Giselle, Andrew. Thanks for tuning in, guys. Please feel free to put your comments and questions below. We're here with Peter and we're just talking about credit ratings. So Peter just explained that basically a credit rating is really important because every time you apply for finance, whether that be a home loan or an investment loan, or whether it be applying for an interest-free purchase
Correct.
or a phone plan, those organisations are going to be checking your credit report and in particular checking your credit rating. So basically there's no denying that it's important, and what
Absolutely.
we're starting to see more as technology evolves is that computers more and more are making the decisions.
Absolutely.
About who should get approved finance and who shouldn't, and it's all based on the credit rating.
It is. So there's a lot of companies that have what's called auto approvals and credit score approvals.
And also auto declines.
And auto declines, that's exactly right. They go hand in hand. So just for argument's sake, that they might have a auto decline if anything is under 550 of your credit score. I'm not saying that that's the actual case with everyone, but that's just an example. So your credit file not only contains a lot of information like inquiries and your personal data, but it also tells a lender that if you've had a judgment against you, a default against you, which is an overdue account, and also now if you, as of 1st of July last year, and this is what we're going to get onto, the comprehensive credit reporting, whether you've been late on certain accounts and certain payments.
Yep.
So all of that then compiles a score, and the score ranges from 0 to 1200. Obviously the higher you are, the better it is. The lower you are, the not so good it is. So that credit score is really important. You want to try and do everything you can to maintain a very good credit score.
And we're certainly finding that, you know, when you go to apply for a home loan or an investment loan, for example, if you do have a really strong credit score, the bank asks for less information.
True, that's right as well.
You know, whereas if you have a weaker credit score, it might still get approved, but it might be a little bit more of a painful process to get approved.
Yeah, it's a bit of a Pauline Hanson, please explain.
Yeah, so I mean, it's great that we've touched on comprehensive credit reporting. I'm going to want to take that one step further.
Sure.
Because like you said, that you've sort of brought that through 1st of July. Or was it 1st of July
1st of July
last year?
became, last year, it actually became mandatory for 100% of information to be disclosed. It actually has been going on since probably 2004 in terms of the development of this area. But most significantly, the last 2 to 3 years is where this has been more of an impact and more relevant. And especially as of 1st of July last year, it became mandatory for credit providers to actually disclose 100% of the information they hold on a customer.
So previously, credit reports would only show the big things.
Correct.
Like
it would show defaults, judgments, insolvency
late,
actions.
Yeah, but it wouldn't show things like late payments as such,
Correct.
unless it got to a point where it was quite serious.
Yes, so previously a late payment would actually turn into a default. But
if
it would,
was late by
60 days or more, and then there's a notice process. So after say about 3 months or 4 months.
Yeah. Whereas now we have comprehensive credit reporting, which means that there's a lot more information on your credit report than there was previously.
Correct.
So I think were you saying that it's 2 weeks late now? If you're 2 weeks behind, is that how it works?
So what happens is if you have an account that's due, say if it's due today, be it a credit card, mortgage, home loan, mortgage, home loan, personal loan, and that payment is due today, there's actually a 14-day grace period. So as long as you make that payment between today and within those 14 days, you won't be recorded as late. You'll actually be recorded as on time. So a recording when you're on time is also made. If you're late, then it depends on the amount of time that you're late as to what the category is. So if you're 14 days to 30 days late, you'll get a category 1 recorded saying that you were between that period and that's how late you were in making the payment. And of course, progressively, if you're more than 30 days or more than 60 days and 90 days, that progresses right up to 180 days, where you'll get the highest category as a 6, and then after that, it will actually turn into an X.
Yeah. So that is... And it's going to start to become a lot more serious. I mean, it already is in terms of lenders really taking notice of this information when they're deciding whether to approve a loan or decline a loan.
Correct.
So, you know, missing a payment by 14 days, that's easy to do.
Very easy to do.
You know,
it
we
really is.
have, you know, I've met lots of people who financially they're fine, but you know, sometimes just life gets busy and they forget to pay a bill.
Like that's absolutely,
it's not difficult.
It's not. It's absolutely easy to be within that 30-day. And some people actually have ways where they are paying accounts in a certain manner that potentially could lead them to be over 14 days late. Without trying, just the way they are set up. So this is, and the thing is, it's about awareness. A lot of consumers are not aware of this. So they just think if they're paying their account within 30 days that they should be fine after the due date, which is, you know, common for a lot of people. But the impact is quite severe. Thankfully, a Category 1 isn't the most severe. And from our experience, what we've found with dealing with brokers right across Australia is that when we're dealing with issues about this, that a Category 1 isn't affecting so much, but nevertheless, it's about habit as well. So you've got to get into the right habit of trying to be at least mindful.
Absolutely. So we do have, Peter's kindly provided us with a document that shows us the different categories and the different rankings and how you get ranked on those levels. We did say at the beginning that we were going to put it in the comment section below, but we're having some issues, technical issues attaching the file. So what we're going to do is we are going to provide the file on a copy of our blog that will be available after the end of this Facebook Live, which we will have available on the Rise High website. But we will also have it available. If anyone wants it desperately now, they can send an email to emily@risehigh.com.au and she will email it through to you as we're speaking. So that will be available to you.
And what that actually does is, I'll sorry to cut in, but it'll actually set out the codes of what the categories are that can be recorded and what those codes actually mean. So it gives you a good explanation.
Do you think it's a good idea for people to actually get a copy of their credit report, because you can get a free copy of your credit report?
Yeah, absolutely. So everyone's entitled to a free copy. They just have to subscribe to either Equifax or Illion, and it's quite easy. You get it pretty much within 24 to 48 hours. Also with Equifax, they have a really good membership. I think it's about $89 a year, and it actually also gives you alerts. So anytime there's an activity on your file, whether you're aware or not aware, it actually sends you an alert. And I think that's actually really good, because there's a lot of people that don't know something has happened, whether that be a default or something, or an inquiry or something on the file. And so being alerted is actually a good way to maintain and stay in control of your credit file.
Absolutely. So we might also put a link in the comments below and also in our blog following this session about how you can apply for a free copy of your credit report. So that, together with the document that Peter's provided, you'll be able to see how your credit report stacks up and what it looks like. Welcome to Tem, Kristen, Sandy, Sam. Thanks for joining us, guys. Really appreciate you tuning in. We'd love your questions or comments, so please shoot them below in the comment section. So let's just talk about what happens if, we've sort of touched on this, but let's drill into it a bit deeper. So what happens if someone misses a payment? Let's say they miss, you know, a home loan repayment, or they miss a utility repayment, or what are the ramifications?
Sure. Okay, so firstly, the only payments that can be reported are from Australian licensed credit providers. So they're the only ones that actually can report on payment history. So that means home loans, credit cards, personal loans, auto loans, they're the only types of loans that can actually be in comprehensive credit reporting. Thankfully, it's not to do with utilities or telcos, which is a good thing, because there's just, otherwise our credit reports would be,
So just to clarify that, utilities and telcos are not included in the comprehensive credit reporting, which means they're not going to mark on your credit report if you're 14 days late.
Correct.
But they can still lodge a default on your credit report if you are. How many days late would you say before they actually have the ability to lodge a default on your credit report?
So with a default is very different to the payment history that we're talking about under comprehensive credit reporting. A default is essentially if you're 60 days or more in arrears on an account, a credit provider can then start the process of putting a default on. Now, once you're 60 days or more in arrears, they actually must send you some notices, and those notices can take up to 45 days before they can actually then commence a default on your credit file. So yes, that's very different to late payments. So Telcos and utilities, those other types of creditors that are not Australian licensed credit providers can still put a default, but not.
They have to inform you first.
Correct, yes.
So in that situation where you've got a default, you should probably know about it before the default is registered in your credit rate report.
You should hopefully know about it if you've received the notices. But there's a lot of consumers and customers out there and clients that we deal with that aren't aware, and then there are other circumstances surrounding potentially grounds why a default can be removed. So a default can only be removed if it's been placed in error. And what that means is it doesn't matter if it's been paid or not paid. What it actually means is, did the credit provider follow all the processes before they put the default on? And that's how a default is removed.
I mean, you help clients remove defaults every day.
Yes.
How much success do you find, how often do the credit providers not actually follow the correct process where you can actually get the default removed? Is that quite common, or?
Yeah, look, it really actually is. Look, our success rate is very, very high. One of the key factors to that, though, is we honestly assess a file before we take it on. So unless we know that we can actually do something first, we don't take on the file. But once we've established that there's definitely grounds or there's something that we can do to help a client, we definitely take on the file. And yes, so what we will then do is look at the grounds as to what happened with that default. So we'll analyse the credit file and then speak with the client and gauge those facts. And that gives us an idea whether those grounds exist to remove the default, and that's where our success is. And yes, creditors do get it wrong a lot. Either they haven't sent notices or they didn't send it correctly, but there are other factors too. There's financial hardship grounds, which relates to whether a person should have been defaulted or not. And there's also things like statute barred debts. So there's some other grounds as well. So we delve into all of that.
So if the viewers get a copy of their credit report and there's something on it that concerns them, there is the ability to potentially get it removed or amended.
Correct.
Based on what the circumstances are.
It's not all doom and gloom straight away.
And it's just really good practice to have a copy of that credit report to really understand your credit rating before you actually apply for anything. So it's good to know that, things can be reported on the credit report incorrectly, but they can be removed. So that's really good. Because I've even seen historically some really simple cases. I think one of our clients had a default on her credit report for a mobile phone that her son was using.
Yes.
And she had moved home and not realised that, not received any of the notices or any of the bills. But the mobile phone plan was in her name. So it could be something as simple as that.
Very common. It's a very common scenario. We see it quite a lot. And it is. And there's so many things. Moving address, renters are normally the highest category that we do see, where they leave a property, go to another property. Creditor was aware of the new address, but was sending to the old address, or they didn't send at all the notices. So we do tend to see a lot of that.
Yeah. How do you prove that the notices weren't sent at all?
So essentially what we do is we investigate the matter with the creditor. We obtain all the supporting information we can from a client. We make a submission to the creditor, and then it's sort of a bit of an onus on the creditor then to disprove that the notices were sent and actually were sent correctly, and they were done within the right time frame.
Yeah, okay, great. So what advice would you give to someone who is struggling to meet their repayments or struggling to meet all of their financial commitments at this point?
Really, really important. I think now with comprehensive credit reporting, it is so much more important right now to be on top of things. If you are struggling, the number one thing is to, as soon as possible, contact your creditor. Whether it's the bank, whoever it is, just contact them, tell them what's happening. Tell them that if you're in some sort of financial hardship or a problem at the present time, and they can actually then assist. And this actually will then help prevent your affecting your credit score.
Yeah, because I think people are often scared to do that because they don't know what impact it will have. But it's interesting that actually contacting the bank or contacting the telco or whoever you need to contact to let them know of your situation, then it's kind of puts a freeze on the account to it, in the sense that they they can't actually report on your credit report during that period. Is that what happens?
Yeah, so in two parts, with comprehensive credit reporting, by going on a financial hardship arrangement, that actually then protects from having late repayments, which will then obviously protect your credit score. In terms of defaults, that's correct as well. If someone is under financial hardship, there are actually legislation that says that a creditor should not report information to a credit reporting bureau if someone is under financial hardship.
Yeah.
And they have certain obligations and certain things they need to do with a consumer or customer that's under financial hardship, rather than just reporting them as a default.
Yeah, so financial hardship, just to clarify what that means that you've contacted the bank and you've told them that you're going to struggle to meet your repayments, and potentially you've negotiated another payment plan in order to catch up with those payments down the track.
Yeah, correct.
Would that be
correct.
fair?
So financial hardship is the definition of it, pretty much under the Privacy Act, is that when someone can't afford to meet their repayments.
Yeah.
So something significant might have happened. It could be an illness. It could be loss of employment.
Yeah.
It could
Reduction
be medical.
of employment.
Yeah, it could be anything like that. So it really is, financial hardship isn't a blanket for everyone, as in it doesn't have a benchmark as to what that means. It's really when you are in trouble and you can't afford your repayments any further, that's what financial hardship is.
So I think that's great advice. So get on the front foot and contact your credit provider. I mean, if in doubt or you want to have a chat first, then of course you can contact your mortgage broker at Rise High and we can talk you through it as well. But definitely being proactive rather than putting your head in the sand is the right strategy. Would you agree?
100%.
I really want to spend a little bit of time now moving forward to repayment holidays.
Oh, yeah.
Because obviously one of the things that was introduced during this period to help people through the coronavirus was to allow people to go on 3 to 6 month repayment holidays with their loans. And I think initially I got the feeling that people didn't understand what that actually was.
Yeah.
So we did you would recall, you might have seen a video that I did about repayment holidays, and that you're actually not getting an interest-free period.
No,
you're just getting delayed repayments rather than a repayment holiday. I think the branding repayment holiday was a bit misleading.
Oh, definitely.
So right now, anyone that is struggling financially has probably been able to enter into a repayment holiday pretty easily with their current bank for their home loan, which is great.
Yep.
But there will come a point in time over the coming months where that repayment holiday will end.
Yeah.
And it's unlikely that the bank will extend that repayment holiday beyond that date unless you do have a financial hardship arrangement with them. So I guess I've got two parts to my question. Firstly, if someone has applied for a repayment holiday, does that impact their credit rating?
Yep.
Let's answer that one, and then we'll go into part
Sure.
2 of my question.
Done. Well, firstly, I'm not a big fan of the word holiday in this sense.
Yes.
Holiday's like going to Bali. That's a holiday.
Let's call it a repayment deferral.
Yeah, I honestly think that the use of holiday has actually given people a different idea of what that means. Like you said, a lot of people think that it's 6 months of, or whatever period up until September, of free payments, no payments to be made. It's actually definitely not the case, as you so rightly said. So all it is just deferring those payments, which means that it's deferring the principal of whatever principal is in subject of that, and also the interest. The interest doesn't stop. So those principal and interest payments are accruing. So what happens is that you're going to get to a point in time at some stage, as you said, the holiday will finish. Not in the sense of coming back from Bali, it'll be coming back from something else, a little bit more not as good. And so that's going to create a massive arrears for a lot of people. So that's the concern that I have moving forward. However, does it impact on your credit file or credit score at the present time? It's not meant to. There's been some quite clear directives that there shouldn't be any reporting of late payments or financial hardship issues related to people during this COVID period. However, we've already experienced ourselves that we've had files and clients presented to us that actually have had this occur.
So they've gone on a repayment holiday and it's been incorrectly noted on their credit report that they've been late.
Yes. So the advice is, no matter what, whether we believe that we're under this protective blanket of COVID or not, I would advise everyone to still contact your creditor and go through the formal process. Don't take it as a given, because that's what unfortunately then can lead to challenging errors that take a lot longer to fix and a bit more difficulty.
And every bank's going to treat the end of the repayment holiday or the repayment deferral a bit differently.
Yeah, absolutely.
So some lenders are capitalising the extra interest onto the loan and asking for that to be paid over the same loan term that the client had previously. Other lenders are extending the loan term to match the repayment deferral period. So for some of you, you might come out of the repayment holiday and have a higher repayment than what you had before you went on the repayment holiday deferral. So that's where you need to really make sure that your cash flow budgeting is on the mark. And for some of you, you may not have returned to full employment by the time that repayment holiday deferral finishes. So that's where I'm concerned, because I think what happens for people that have taken the repayment holidays and they get to the end of the repayment holiday period and they still can't afford it, or can't afford what the repayments revert to at that point. You know, what are your thoughts about that?
Yeah, 100% I agree with you. Look, no doubt we're in some difficult times, and there are a lot of people that unfortunately are struggling. We have to be helpful and mindful about that. But I guess first step I would start with is that if you can still afford your payments, or if you can still afford some payments, my advice would be still continue to make those payments if you can, or even some of those payments if you can. Obviously people struggling, totally understand. I'm a bit of a fan of the second option that you said about banks extending the term. I'm not a big fan of generally, well, there's a lot of cases that we run for clients that are in financial hardship when we're doing some debt negotiation where we actually do ask for capitalised arrears. However, they're in certain circumstances. But given what's going to occur here, I think extending the loan at the end is going to be a lot better for most consumers. But there's been no direction on it.
Consumers don't get to choose.
No, and no lenders have come through and said what they're going to do at this stage. There's no one that has definitely said it's going to be on a case-by-case basis.
I think there have been some lenders have made it clear through their through the information on their website. But there is still a little bit of unknown. So if you are on a repayment holiday, probably the first thing that you need to do is contact your bank to actually understand what actually will happen when the repayment holiday finishes.
Absolutely.
Because that's the unknown.
Absolutely.
You know, that's what you need to be clear on, and you need to know what date that finishes and what is expected of you. Because if you miss that first repayment going back, that already is enough to put a mark on your credit report and impact your credit rating moving forward, which is obviously not what we want to do.
No, absolutely. That is totally correct. So get onto them. If you are on a payment holiday, definitely, as Marissa said, I think you should be aware of when your payment holiday is going to finish and what that's going to mean. And then if you get to that point and there are still struggles and you're still in financial hardship, that's where it's so important to, again, see what can be done to stop your credit score being affected.
And how long does the information, how long does a default haunt you on your credit report? So if you do have sort of, if you do have some mishaps or something like that, and you do have some things negative showing on there, how long are you haunted by this?
So comprehensive credit reporting, the repayment history is a 2-year period. So that's only on there for 2 years. So that is for the last 2 years of your repayment history. With a default and a court...
That's a long time.
It is. It's a really long time.
That's a long time. That means what happens today impacts you in 2 years' time.
Correct. So if you were reported late for a payment today or this month, that recording of that late repayment will not drop off your credit file until 2 years' time. So it's the last 2 years' history for that.
And that could impact your ability to be able to get loans from, the cheapest lenders in the market, for example, that require the highest standard of credit rating when they assess applicants.
Absolutely.
So it does impact you down the track.
Absolutely it does. And then defaults, judgments, insolvency actions can remain on your credit file for up to 5 years,
Okay.
depending if they've been placed in error and can be removed, but otherwise for defaults, judgments and insolvency, it's a 5-year on your credit file.
And I know we've been focusing a lot on what happens if you miss repayments, but I also think it's important to note that with positive credit reporting, customers with good credit history can get rewarded.
Yes, correct. So there's also the positive reporting side of it too, which amongst all this negative side of it. And so if you're making your payments on time, that actually gets recorded as well. And it's generally recorded as a 0, which means payment on time. And the more consistent that is, the better that helps your score too.
I've always thought that with the introduction of comprehensive credit reporting, that in the future we might find ourselves moving to a risk-based pricing model where banks might reward customers that have really good repayment histories and really good account conduct.
Absolutely.
With better interest rates. I don't know if that will happen, but I just thought that might be where we head in the future.
Hopefully it does, because you certainly get not rewarded for risk with bad credit. so it would be nice to see that.
Well, that's the thing. That kind of already happens, but I wondered with the introduction of positive credit reporting and comprehensive credit reporting whether that would go a step further.
Yeah, hopefully
and
it
there
does.
might be some more tiers in between great account conduct and some issues on the account.
Yeah, absolutely.
So is there any other advice, any other last tips that you want to share with our audience, Peter, about comprehensive credit reporting before we wrap it up?
Look, I'll probably give just a very quick case study. Is that all right?
Oh, of course.
Yep,
We love a good case study.
So we, and this is a really, really important case study because it's set a somewhat precedent. So we had a client presented to us from a broker that was in financial hardship, and we were engaged to negotiate with the creditors for a settlement of those debts. We engaged with one of the creditors, and during this period of what we were doing negotiating with the creditors, this one particular creditor was reporting the late repayments. So it took us about 3 months, it took us firstly about a month to get everything organised for this client. And then when she went back to the broker then went to reapply for a consolidation loan to pay out the creditors. And unfortunately, one of the creditors had placed some late payment history. So that actually stopped her from doing the very object that she was trying to achieve. So we wrote to the creditor, we went back to them, made a submission, said that we believe that they shouldn't have reported those repayment histories because clearly under Section 72 it affords you a protection once you've notified the creditor that you're in financial hardship. Creditor came back to us and said no, that they believed that essentially that they could still continue to report late repayment history even while an assessment was being made for financial hardship. In this case, the creditor actually approved the financial hardship, which was a debt settlement, which is technically a form of financial hardship because any variance to a contract is a form of financial hardship. And so they came back to us and said no, they disagreed. We took the matter further because we believed strongly in this, and also the client was in a real predicament. Unfortunately, creditor was continuing to disagree with us. We ended up taking the matter to the independent customer advocate. The independent customer advocate then asked for a submission from the creditor and a submission from us in terms of what our grounds were, and ultimately they agreed with us.
That's
so
great.
What actually that means is that they agreed that in the interpretation that any time that a person contacts their creditor and says that they're in financial hardship, and during the period of while that's being assessed or until approval or for whatever variance of that hardship relates to that credit contract, that they should not be reporting late repayment history throughout that period. Because some of the debt negotiations we do for clients can take up to 2-3 months.
Yeah.
And so you don't want 2-3 months to achieve one thing to help a person that's in hardship.
In the meantime,
and in the meantime, So it was a really, really important case that we were actually able to win, and it was very, very satisfactory, and it was a great outcome. So it actually does clarify the fact that if you are in financial hardship and you are in some sort of financial hardship arrangement, you should not be reported late for your repayment history.
As long as you've been proactive and you've
absolutely
you've informed the lender or informed the credit provider that that's going to be the case before it actually happens.
Correct.
That's the key.
Absolutely, that is the key. Correct.
You know, I mean, if you miss telling them and just leave it, then it's difficult.
Absolutely, then it's difficult because once you have been reported late for payments, they can be corrected if they've been placed in error. So it's an important thing to understand that if you have got late repayments on your credit file, provided that they were placed correctly, then there's nothing that can be done. However, if they have been placed incorrectly, as in this case study that we just did, it can be corrected.
Yeah. Excellent. Well, we have run out of time, but thanks for tuning in today. So I've also got a really interesting catch up with a great property manager next week, where we'll be talking about the impact for tenants and landlords with all of the things that have been happening through the coronavirus. So if you are a tenant or a landlord, you're going to want to tune into that one. We'll have more details on our website and Facebook page about that. And we also will link you through to our blog about COVID-19, and we have lots of great useful videos about what you can do to avoid a financial hangover following this difficult period, or what to do if your income has reduced, what to do if you've lost your job. Lots of different things like that in video format that will help you. So we'll link that below, and hopefully you will enjoy having access to those bits of information. Peter, thank you. It's been a pleasure to have you. Thanks for all of your guidance and advice today.
No problems at all. Thank you so much for having me, and it's been a pleasure.
We'll see you guys next time. Thanks.
Bye, guys.
Bye.